Welcome, everyone, to Sunday Fuel for January 18th, 2026. I am your host, Tom, Sacred Prophet Hartman, here to talk to you about the fourth turning and the end of the world as we know it. That's right. I had some pushback last week when I said that jobs were being eaten up by AI and that we have to turn our sights, our eyes, our gaze towards trading in order to use that as an avenue for generating revenues for ourselves. People were coming out of the woodwork saying, hey, Tom, you're totally wrong. Jobs are not being lost by AI. It's not good enough. It's not enough to replace people or anything like that. And it's just overhyped cycle. You are wrong. Dead wrong. Look, I know you guys are traders. I'm speaking to the congregation of the willing. You guys are the called. You guys are the chosen. And you understand, you're probably here in trading and you're like, hey, I'm here because it's fun. It's interesting. It's a video game with, speed run, one life, got to make your money. I understand that. But I'm here not because of that. I could care less about that. What I care about is the idea that the options that are becoming available to people outside of the regular jobs, the options to actually make money are rapidly dwindling. They're disappearing. Before, you can make money drop shipping, affiliate marketing. You can make money doing an Airbnb. You could Uber. You could skip the dish, skip the line. No, not skip the line. What's that? What's that? Driver one
Dish.
Lyft. All that sort of things. And these options are quickly being destroyed by AI and robotics. Now I get it. The way that they're saying it in the headlines is not exactly how it is. It's not that people are losing the job on in droves by the thousands and thousands and thousands because they are literally being replaced by AI. No. What's happening is that we are in a cycle where we're at the near the bottom of or headed towards the bottom of the business cycle, right? We're seeing the unemployment rate tick up and we're seeing companies start to lay off their workers in order to save their bottom line. Starts with the bigger corporations, the Amazons of the world, the Walmarts, the Microsofts, and then it'll slowly trickle down to where it gets to you. The problem here is that normally people are expecting, okay, after I lose my job here, there'll be a short span of time, maybe 6 months to 2.5 years, where I'm going to have to live on my savings or find other ways of supporting myself, and then things will pick back up and I'll get my job back. This is just a normal cycle. Wrong. Dead wrong. These jobs are not coming back. A lot of them are not coming back. You can imagine how good AI is right now, but can you imagine what AI is going to be like in 2 years? Well, if you're a manager, if you're a boss, if you're a CEO, you're already thinking ahead for that now. You're not going to hire somebody today or in a year from now if you think, hey, AI might get good enough that I might have to fire that person later on. You're not going to do that. You're not going to move across the country. You're not going to have them set up inside your systems. No. What you're going to do is you're going to deal with what you have right now. You're going to have your existing staff use AI in order to get whatever productivity gains you can get out of that, and you'll keep your savings and not burn through your runway or your cash because we're headed into the end of the fourth quarter, fourth turning, the beginning of the first turning, where we don't know what the future looks like. And so trading is one of the only revenue sources that a regular average person can go to generate revenue based on their own merit, based on their own skill, their ability to maintain their own focus, and to use systems in order to get them to become better traders. And no one can fire them, no one can kick them out. They have access to it as much as they want. That's why I think it's one of the main things people are going to be turning to over the next few years. And you're here ahead of the game. All right. So we're seeing Microsoft lay off people in the video game space because they're saying, hey, we need to put money towards AI. We're seeing people stop hiring because they're like, hey, we don't know what AI is going to look like in the future. And yes, we're still seeing some percentage of people, some percentage of middle to lower end people within an organization where they go, hey, maybe I don't need 8 of you to do this job because 3 of you are using AI and crushing it. So let me fire the rest of you and give the people who are there a little bit of a bonus. It's a new world, people. We're headed to Elysium and whoever is on the earth. We're headed to District 9 and the rest of us. We're headed to District 1 in Hunger Games, and District 12 and 13. And you don't want to be left on the wrong side. But enough with the doom and gloom. Let's turn to the hope. Your shining beacon in the darkness. Sacred Prophet.
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
And I really can't wait for people to be losing their jobs in droves and finally turning their going, hey, Tom, can I have access to your service? And I go, no, we're full up. Sorry, the manger with you. Oh, hey, everyone.
Hey.
Welcome. I'm Sacred Prophet, once again, joined as ever by my plucky sidekick and Aaron in training, Peter, Bad Guru Hartman. Take a bow, Peter.
I'm not Aaron in training. I'm the acolyte, the disciple. Call me Pope, but I'm not Aaron in training.
Peter,
only because most people don't know what Aaron in training even means. AI thinks you're saying Aaron in training.
Aaron, Moses' companion.
Nobody cares.
Brother? Was he his brother? Because the problem with Moses is that he had a stutter. Do people know this, that Moses had a stutter? He had
I don't want to talk about Moses. I don't think anybody cares.
Let my people go. For the situation, I don't know if it's a list. And so Aaron was the one who would actually speak on behalf of Moses. I don't know if people know this. But the power came from Moses. The authority came from God, channeled through Moses. And Aaron, well, look, if he could have done something better, I'm sure he would have.
I don't want to talk about Moses and Aaron. People don't care about that. That's my whole point.
Okay, let's talk about markets. Let's talk about making money. And
aren't there like characters in like Stranger Things or something you can refer me to? Can I be like Jon Snow or something? You'll be Khaleesi. You'll be Khaleesi, right? And I'll be Jon Snow. There you go.
No, Khaleesi's not like that. Khaleesi is a. Wait, I can own eunuchs. Yeah, that works. You be Jon Snow.
Yes.
And then I'll be Khaleesi, Mother of Dragons. Okay. Okay.
Okay.
Let's do that.
All right.
All right, Peter.
Okay, but I thought you were going to say for the AI stuff that people aren't losing their jobs due to AI.
They are losing their jobs due to AI, but not losing their jobs because their job has literally been replaced by AI. That's coming. But AI is the impetus for them to be able to lose their jobs, because if you're hiring right now, you don't want to be the guy who has to fire someone later on because AI is going to do their job. You're going to wait. And we're not in some big frenzy where, even though stock market is doing all-time highs, we're not in this euphoria, GameStop, SPAC, Chamath Palihapitiya, pumping everyone up on their bags. That's not where we are right now. We're in, hey, is Bitcoin in a bear market? Yes. Have markets stopped for the cycle? Probably. And what's going on with debt and refinancing? Not good. So if you think, hey, I'm going to start my business now, ridiculous. Okay, now's not the time to do it.
That's not the time to do it. I like that we've talked in the past privately. You keep talking about understanding markets is not just good for trading; it's also good for learning when to make decisions, when to leave that job, when to start a business, when to, buy that car, when to make decisions in your life. And you wanted to actually build some type of system that allowed people to ask the market these types of questions.
Yeah, it's like a weather system, or a season system. There's certain things you do in winter, certain things you do in summer. And it just makes sense. If you're going to get married, if you want to propose, get married or whatever, do it. You want to propose when things are going well. You want to get married when things are going poorly. And then to your partner, it's all upside from here. It's like, oh my God, the first 15 years of our relationship, it felt like things just got better and better and better. I married you winter, little lady. Married you in the depths and darkness of hell. But they don't know that. They don't know that.
Speaking about depths and darkness, there is a vibe I feel like in the crypto space that crypto is dead, that there's no money coming, et cetera, et cetera. We've talked here on this channel about how you can make money in a bear market with Bitcoin, and I think it's a good time for us to bring that back up and for me to ask you: one, is that possible? Two, are you doing it? And three, how?
All right. First of all, just to make this clear, I know we've been on the fence for the last couple of weeks. These season changes. You never know if an Indian summer is going to show up all of a sudden. But as it stands right now, Bitcoin, as far as we're concerned, is in a bear market. This is a tweet I put out a couple of days ago just to make it clear to people. So I said here, Peter, if you want to read my words here for me.
Just so you know, yes, I'm still seeing a bear market in Bitcoin. The 3 month VWAP would need to cross above 99,000 approximately by April and stay there to switch back. Sorry, it goes away when you do that. Give me a second.
Oh, go ahead.
All right, I'll start over. Just so you know, yes, I'm still seeing a bear market in Bitcoin. The 3 month VWAP would need to cross above 99,000 approximately by April and stay there to switch back to neutral. If it stayed there past April, we'd be back to bullish. Yes, this could totally be negated by a bombastic move. We're in the fourth turning after all.
Yeah. So I want to make this clear to people here that I'm not sitting around like guessing. All right. Bitcoin fell below our yearly volume weighted moving average. That's our line in the sand for a bear market, bull market. It's below that. And so we are in bear market. And until it goes above there, no, we're not. We're not back into the bull market. If we move back up here around above 99,000, let's call it 100,000 even, we're in neutral territory. We're just neutral territory, the same territory we've been in for the last couple of months, neutral. And we're going to chop around before we give up the ghost. And we've seen this in cycle and cycle and cycle before. So I just want to bring this up here because it is pretty important. If we take a look at the Bitcoin cycle here, what you're seeing on the chart is, of course, our three main indicators, our three flagship indicators. That's wave from the cycles bundle, trend, and levels, which lets us see what an asset looks like over time. And we take a look at Bitcoin. Let's say we switch to. Let me just pull this out a bit. All right. So our line in the sand is over here. Let me just hide this. Hide this. Our line in the sand is this red line. This red line that you're seeing here. This is our volume weighted moving average. So you see, last time the price fell below that level. Let me zoom in.
That
The
red
price
line is
fell
what
below that
indicator
level.
in your that red line is what indicator in your indicator packs?
This is wave from the cycles bundle. So this red line is our line in the sand, and you see how we fell down below there. And even though we fell down, we came back up and touched it 1, 2, 3 times. Right? This is even a higher high. And a lot of people thought, hey, we're headed back up into the bull market. Peter, I don't know if you remember, this is one of the first calls I ever made for the bear market for Bitcoin. This is years ago. This is in 2022 in our crypto group that we were in at the time. And when we came up over here, I said, nope, we're done. We're going to be turning down the other side. I didn't even have these indicators yet, but I did have the precursors to this. And we hit it and we fell straight down after that. I mean, from there, it was do not pass go. We are headed straight into the doldrums. And that's exactly what happened. So just because the price can rise, right? Here we were at a low of 32,000 and it went all the way back up to 48,000. This was a move that was 45% up.
Hmm.
And people were hella bullish. And then we fell. So if something similar happened now, we can go off the lows up 45% would bring us back up to around 116,000, which is what I was talking about on Twitter here. This 114,000 over here. We can get all the way up over here and still be in a bear market. All right. So this goes back to the thing you're asking about making money. Now, because we're making money, we're looking for shorts. All right. We're looking for shorts in the market because if we can get a short, for me, I have a limit order set at 99.9 thousand on Bitcoin and at 114,000. Those to me would be perfect short entries. Why? Because I want to be able to hold a 50x short from over here down to over here.
Yeah.
I want to be able to do that. This is a drop of something like 66%, right? Which at 50x leverage gives us 33 times your money. That's a short I like, all within a year. That's the kind of things I like. Fine. Am I going to hold it all the way down? Maybe, maybe not. But I have an expectation here that the low end of the range that we're going to reach to for Bitcoin, if we do fall, will be around 54,000. That's this orange line down here. All right. Why are we paying
It's
attention
really
to that? Because it's the same line that we hit every single time. Here was the low. Here was the low. These are the lows of the session if we're going by the 4-year cycle that we've seen in Bitcoin past.
that's really good to know.
Yeah. Well, that way you don't get shaken out of your short. And you don't get, if there's a 25% bounce, a 30% bounce, you're not shaking out of it. In the same way that when you're in the long period, when you're long, these drops here, these 25% drops, 30% drops, 30% drops, they don't shake you out. You just keep holding it, right? Well, the same thing will happen on the short side, but faster, where you have the 4-year cycle for Bitcoin, you have for the bull market, you have the 1-year cycle for the bear market. If the previous pattern holds, that's all we can do. We're just playing the previous patterns. So yeah, I'm pretty excited by that. And I'm not sitting here wondering, oh my God, should I get in? Should I get out? I'm not grinding my teeth at night worried about it. I'm below the red line. I'm looking to short. I'm above the red line. I'm looking to go long. Simple.
Has this affected your trading? Like, are you able to make profitable trades like this, or your strategies making profitable trades like this using this information?
Well, actually, so the time you want to make profit is when you're in the up cycle or the down cycle. When you're at the turns of the cycles, these are the places where people lose the most amount of money. So the goal here is to not lose that money. So it happens both ways. When you have the big rally up, people then get euphoric. So for example, over here, people get euphoric and they're adding, thinking, oh my God, we're going to break out, right? And if you know that you're headed towards the top of the cycle, you book your gains and you stay out of the market if you're not nimble enough to get in and out, in and out. You stay out of the market. And people lose tons of money chopping themselves up. Ooh, I should stay. Oh, I should not. Ooh, I should stay. I should not. And so the price will fall, right? You can imagine someone will go like, the price will go up. Just imagine this. The price goes up. So the person is sees in their account balance, I'm up $100,000. Oh my God, I'm richer now than I was before. Oh, what can I spend that money on? Oh, my is me, golly me. Then it pulls back and they go, oh, well, I guess you could still hold. Because I remember the other times it bounced, and they get down over here. And then they panic. And so they sell. Then as it rises back up, here they go, oh, I should have got back in. So they buy in a little bit. It pulls back. And they go, oh no, I was totally right. It was going to fall. And then they sell. And they do that again and again and again. And you can imagine by the time they get over here, now they go, I don't want to miss out like I did previously. I'm going to go back in 100%. And then it falls and they lose a bunch of the money. And by the time they sell out around here. All right.
Jesus Christ.
And yeah, absolutely. And so some people, the entire gain that they could have had, because they're not getting in at the bottom of COVID over here, they probably got in somewhere like over here, right? The second impulse, right? These are the early guys. These are the people, these are the degens. These are the guys who are like, okay, the first move I'm going to take it. These are the guys who are like on the sidelines. Oh my God, Bitcoin's going up. Let me buy. And so they buy over here. They take this whole journey up. They come down over here and they sell over there. So they could lose their entire gain, or almost all of it. Some of them are negative at the time because they take leverage. They don't, all the things that they missed out on. They think they're going to call the future. They're going to be Babe Ruth. They're going to call the home run, and they just lose the money again and again. Happens all the time, right? Happens all the time. And so at the tops of the cycle, the goal is to stay out of it. Book your gains and stay out of it. At the bottom of the cycle, people over here, in the same way that I was just talking about at the beginning over here, by the time it gets over here, they're shorting so hard. I did this on this cycle over here. It gets down to over here, the level at 15,000. I go, it's going to go to 6. Why? Because a guy before over here told me it was going to fall on a dead, and the guy over here told me it was going to fall on a dead, and the guy over here told me it was going to fall on a dead, and Gareth Soloway and Richard Hart told me over here it's going to fall, and I didn't listen. So, oh god damn it, here I'm going to listen because it's going to fall. And what happens? It goes up the other way because we're at the bottom of the cycle. So it's at the tops and the bottoms of the cycles that people lose the most amount of money, and it's where you want to be out. That's why it matters to pay attention to these things, even if you're a buying holder.
Hello to Alfredo in the chat. Good to see you there. Tom, that is a very powerful story you just told there. I think you told the story of 1,000 people just now. Hurts to see it. You're part of that story too. Hurt you. And that's where you learn these lessons, right? That's what Sacred Profit is all about. The pain that you experienced caused you to create tools, methods, and a philosophy for looking at the market that has completely, from my perspective, completely changed the way you trade, I think, for the better. You're no longer a gambling addict or, wishing and hoping. You are looking at the market, seeing it for what it is, and your explanations, I think, kind of prove that you know what you're talking about, at least from my perspective.
Yeah, I lost twice, 2 big times I lost, and in a myriad of different ways. And eventually, the last time when I thought to myself, okay, I have 2 choices. I could either eat lead, or I can figure out, okay, make tools in order to surface, hey, why did I make these mistakes? I wasn't even trying to project the future. I just wanted to see, was there a way for me to see that this was going to happen at the time? So I made these indicators. I went to sleep, had nice dreams. I woke up and I turned those dreams into these scripts, these flagship scripts.
You're talking
That
about
then, when I looked at it, I said, "Oh my god, I can't believe it! If I had these at the time, I would totally have seen it."
you're talking about like dreams that instructed you, that taught you.
Yes, I would go to sleep every night. This started in it started in November of 2021. It continued for a few years after that, and almost every week I would go to sleep, and I would have dreams with like bankers and traders and fishermen and teachers and all kinds of different things, just teaching me all kinds of different types of aspects of markets. Well, it wasn't just markets, it was all kinds of other things. And in the dreams, I would insist, hey, can I use this in order to become a better trader? And they'd be like, the dream people would be like, what? We're trying to give you information that how to see existence and life and how to motivate people and how to be a better person and how to guide the future. And you care about trading stocks. Yes. I said, okay. And they gave me these ideas, gave me these scripts, and I went and I programmed them. So they're great. But, you guys all know that I am the voice of the Lord of Liquidity. Um, and I'm here to use these tools in order to guide you also to a better place.
There's something else that you seem to be pretty passionate about. You talk about it all the time. You encourage people to trade, but today I wanted to focus your mind because it's not only that you want people to trade, you want them to not give up on trading. And when you talk about that story, that trader's journey, the ups and downs, I can see a lot of people giving up and saying, oh, trading doesn't work. It doesn't work for me. Most people lose. And part of what you're trying to offer, if I gather, is to give them the tools to be more successful in their trading, right? No guaranteed success. No guaranteed successes here, but dramatically improve your odds by understanding the market by seeing what's going on instead of guessing what's going on. Talk to me about wanting to encourage traders and instruct them in such a way so they don't give up, because I think you see the importance of trading even if it's difficult.
People often equate trading, either stocks or crypto or anything like that, to gambling, like to casinos. And that to me is a very silly and very lowbrow understanding. If you think the people in the know on Wall Street, if you think Warren Buffett, if you think these people are gambling, you think they're guessing, they're not guessing. What happens is that they know the weather patterns.
Right.
There's all kinds of different things, right? They're gardeners when it comes to the markets, and they understand seasons. And to someone who doesn't understand about seasons or about the mechanics of what goes on in the financial markets, it seems like gambling. How could you possibly have known? How could you possibly have known? But you, if you know about winter, you're not surprised when you see the frost start in the early morning hours. You see the dew frost over on the grass, and you go, okay, now I have to completely change the way that I'm doing things because the signs are telling me that the times are changing. And so the reason why financial markets is not gambling, is not like a casino, is that through your own efforts, you can find out more and more and more about what's going on so that you can see the other person's cards, so that you understand how the slot machine works. So you get how the horses are bred in order to run, and you get more and more and more information. And once you get enough information within the field that you're paying attention to, that you have a passion for, there's your edge. There's your edge because you're going to have the patience, you're going to have the sight to see. So, someone who really cares a lot about gold miners and gold assays and figuring out how the gold manufacturing works, well, they're going to know a lot more than the average person just picking a gold stock to trade. If you know that central bankers buy gold when there's problems within the financial system, well, then not only are you able to be like, hey, I can see the signs that there's problems within the financial system. I should go ahead and buy some gold because it'll probably go up because the central bankers are going to be buying it. You're also going to use that as an indicator for other things that are going to be happening. Gold price up will also be a tool for you to figure out, hey, should I short the S&P now? Should I be long tech? What kind of commodities should I buy? Whatever it is, and you're not wondering. That's sitting there curious, wondering what's going on. And so the knowledge of that you apply to yourself, the more you learn, the more you use tools that surface the market structure to you in a way that you can understand, necessarily the better trader you will be. And that's what I want to create. I'm creating tools and providing information so that you, who is already interested in trading, can actually have tools that make you stronger, make you better, make you wiser for every trade that you take.
I think we want to encourage people to and help people to become high value traders. We're going to be putting out a rubric of what a high value trader is. I'm actually pretty excited about that. But the pillars are pretty simple, right? We go with being a halo trader, high earning. That's the H. AI leveraged. So you want to be able to use the technology to be trading on your behalf, surfacing information, helping you. If you participate with Ticket Profit, you're getting some of that because AI is a part of the Ticket Profit system, how you develop these tools. Am I right about that, Tom?
Absolutely. It's an integral part.
So we have H for high value. Sorry, high earning. H, high earning. A is AI leveraged. L is level headed. Oh my God, that's a big one, right? You want to be tilt proof. You want to be level headed. And being able to see the market and not be guessing, I think helps a lot when it comes to your emotion because it's the unknown. What if that person's right? What if that narrative is true? That kind of gets your emotions excited and then makes it so that you might be more susceptible to emotional trading. And then O is for overflow. And that is whatever benefit you get from trading overflows to the people that you care about, friends and family, and to the wider trading community that you are a part of. A halo trader, high earning, AI leverage, level headed, overflow is what a high value trader is. And that's what we want to create here at Sacred Profit. One of the big lessons that I always remember that you taught me, one of the big the pain points that you had, mistakes that you experienced was betting against the system, betting against the institutions. Want to talk about that?
Yeah. Oh my God. It starts with shorts, right? When you're shorting, you feel like you're such a genius. You're like, I saw that you were wrong, that you were, you did something, you know, that I could take advantage of. Jerome Powell, I know more than you. Donald Trump, I know more than you. And you short and you feel so good. And then you forget that every short anyone has ever taken, they had to cover that short. But every long you've taken, any long in the market, As long as you can suffer the drawdown, you never have to sell the long. They didn't make that clear. Look at the stock chart. It goes up and to the right. Every short that has ever been put on needed to be closed and covered, either in profit, either a loss. Every long that you've taken, you could have just bought the low, bought it at any point, and held it. Why? It's because the volatility surface of financial markets, price charts drift towards the upside in general, in aggregate. So I was one of these dum-dums who shorted COVID. Oh, look at me. I shorted COVID. I knew COVID was coming. Shorted COVID, made a bunch of money. And then I go, hey, the world's locking down. People are losing their jobs. This is a hugely unexpected event. What? Of course, the stock market is going to fall even more, right? Wrong. What happened? We had one of the largest rallies we ever had. Why did we have one of the largest rallies we ever had? Because the powers that be, the people who print the money and make the rules for the financial markets, the game board in which you're playing, they only want the stock market to go up. They never want it to go down. So there's you sitting there being like, oh man, I'm going to be a plucky trader. I'm going to short. And there's Jerome Powell, all the central banks, every single administration, every government official, every Nancy Pelosi, every Warren Buffett, everyone, everywhere throughout the entire world, all of them want the stock market to go up. Now, when you are trading, you are dealing with four types of people: buyers, sellers, forced buyers, forced sellers. There are people that are at institutions, regardless of what they think about the markets, they have to buy or they have to sell under certain circumstances. So if you're there and you're a trader and you want to buy and sell, and you're trying to beat your buyers who want to beat the seller, your seller who want to beat the buyer, why on earth would you fight against optional buyers and sellers? You should fight against forced buyers or sellers, because you definitely know the move they're about to do, or you have a high degree of certainty that they're about to throw a right hook. Why wouldn't you want to fight against the guy who's only throwing right hooks? You'd be like, oh, I get it. I just need to attack this way. Then you're just figuring out, how do I want to actually take that turn? How do I actually want to get underneath the guard? How do I want to actually throw my blow? How strong do I have to be? How many punches do I have to do, right? You're thinking about the tactics and strategies of how to do this thing because you already know the move ahead of time.
Right.
All right. And so when it comes to, just remind me of the question you asked me initially, Peter.
The question is fighting against the institutions that exist, right? So going against them is a bad idea.
And so I was constantly hooked on that adrenaline of going against the big guy. I wanted to be David against Goliath. And I don't know why I didn't realize it, but Goliath is recruiting. Goliath wants people on his side, and he has no problem. He wants everybody on his side. And I was like, wait, why don't I just go on Goliath's side?
Okay.
Why am I taking punch after punch after punch? Just go on the winner's side and just steamroll with everybody else. Now, is that me joining the empire against the rebels? Yes. Next question.
The rebels are the good guys, right? No, the empire is the good guy. They're fighting.
Let's not go too deeply into that, Peter.
Look, the Jedi, you watch those movies with a clear eye, and those Jedi, I'm like, I would not want to. I'm like Batman in Batman versus Superman, like there's a god flying around. People are like, he's helping, what if he turns on us? Well, he might not. If there's a 1% chance, we need to treat it as an absolute certainty. I'm going to get rid of those Jedi right away. They use the Force and lightsabers, and I got to live alongside them. No thanks.
Exactly. But, Peter.
Yeah.
From my point of view, the Jedi are evil.
Yes.
All right.
Yeah, the
So
Jedi
let's not
definitely
get caught
evil.
up in good and bad. Let's get caught up in Dior, Hermes, and Birkin bags versus not.
Versus not. Yeah, that's the
Versus
choice.
not.
That's right. All right. Fantastic. I know you've got some things you want to talk about. Did you want to look at the charts first, or do we want to dive into your levels indicator? We're going to talk about how you use levels to trade silver for profit and introduction to CAST in the Anchor Strategy Builder. What's on your mind?
Yeah, let's start off with those three first, and then we'll talk about the levels because I keep referring to these levels of how I'm determining them, and I want people to be able to figure them out for themselves.
Gotcha.
All right. First, 1 second here. All right. So
Press the
I
wrong
want.
button. Can we start over?
All right.
Sorry, I pressed
So
wrong. No problem.
all right. So I'd love to do a quick tutorial here about the levels indicator from the Anchor series on Sacred Profit. If you don't know where that is, if you go to your Sacred Profit account and you click on scripts at the top left, and then on anchors, it'll be this levels indicator right here. And you can just click on the plus and add it to your account. If you're not already a subscriber, head over to sacredprofit.com, sign up. There are multiple ways of doing so. But let's take a look at the MNQ with the levels indicator. Now, what is this indicator trying to do? All the indicators within the anchors bundle are focused on the VWAP, volume weighted average price, with different types of configurations. Why? Because in the vein of dealing with forced buyers and forced sellers, when you're dealing with large players or institutions, they are very often using VWAP in order to get in and out of the positions. Just keep that in mind, right? If you want to go as a regular retail trader and you want to go buy $1,000 worth of MNQ futures, you can do that no problem. You just buy it, and no one, you're a blip, you're plankton in the sea of this asset. But if you want to buy $50 billion worth, well, you can't sit there and press buy on your Robinhood app. That's not going to work.
Okay.
You need to buy a little bit over time. And normally, you might not even do that yourself. You might outsource that to a broker and say, hey, I need you to go ahead and buy me $50 billion worth of this asset. But you're going to want some guarantee. You don't want them to just buy it at any price because you could just do that. You might say, I want you to buy it at VWAP or better. Right? So if you're going to be long, it says I'm going to buy at VWAP or better. So if we head down to take a look at the MNQ chart, let's just see what this looks like. And let's say we just focus on the daily time frame. Let's just hide all the things. So we're just going to see the VWAP on the chart. Give me 1 second. All right. Okay. So let's say you have a VWAP on the chart. This volume weighted moving average. Actually, let's show it on a longer time frame. Might be easier for you to get the idea here. So let's do weekly. All right. So you see this price, how it's oscillating around the VWAP level. This red line is the weekly VWAP for the NASDAQ. Okay. So that example I was giving you about a broker wanted to buy $50 billion worth. Well, some people want to buy, $50 billion worth. Someone else might want to sell $100 billion worth. Someone else might want to buy $2 billion worth. Someone else want to, and so on. So all these orders that are fighting with each other. And they want to get VWAP price or better, or VWAP price or worse, depending if you're long or short. So once the price comes up over here and falls back to VWAP, there might be resting orders there from that broker to go ahead and buy because they're scaling into this position. So every time it comes down over here, it bounces right away. Comes down, it bounces right away. It comes down, it bounces. Why? Because until that order is complete, that broker needs to buy at VWAP or worse to go long for that customer. So they're a forced buyer of the market. And the same thing happens on the other side. Over here, let's say we're in a bearish trend, and here they want to sell out of the market. Well, here they might say, I want you to sell below. So when it comes up over here, it's shorts again. It comes over here, it falls, it goes up, it falls. And the higher it goes above VWAP, the more it falls, because then the broker goes, hey, I have even more room here in order to do it. I could get them an even better price. And as it goes up, they sell even more. They might even cause the price, if you're a broker, you or a market maker or what have you, you might be able to buy and sell. So you might have orders to, you might have $50 billion to sell and $50 billion to buy. So you can cause the selling to cause the price to move in one direction, and then you can cause the buy to move the price in another direction. So you can use both sides of the book in order to drive the price where it needs to be so that you can fill the other guy's orders.
Wow.
So these are forced buyers and forced sellers within the market. This is why we focus on VWAP for this stuff. Now, we're going to think about the one step beyond that. What I've noticed within markets is that not only do you have that mechanics that happens during the day, but the closing price for VWAP at the end of the day, the last value of VWAP. So over here, we're going to take a look at this. The last value of VWAP here on Friday, December 12th, when the markets closed, was over here at, let's call it 25,826, right here at this price. That price, if you keep track of that price, creates a level, an unmitigated level. That means a level that was created and the price has not yet come back to it. And what I found is that price will often come back up to the level before it turns around. That these levels, mitigated and unmitigated, will act as resistance and support, as ceilings and floors for the price, as magnets for the price. It's really quite incredible. If we take a look, I'm literally taking a random thing over here. So we have here, so we have this level over here, this weekly level, and we have this level over here and this level over here. Now notice that once the price came down far enough, it started going back up towards, it's going up towards this level. It's being attracted back up to that level. Not all levels must be cleared, but they do act as attractors. And you'll see here that on its way up, as it went up, it created another level here on the 23rd, for which the price came back and touched it. You see here, the price comes back down and touches it. Then it continues back up, where? To this level. Once it got there, it stuck a little bit. Price fell, and where did it go next? To this level over here. It moved back up to this level. While it stayed there at that level, a new level was created here below it. So where did the price go? It came back down to that level to touch it. These levels act as magnets. Level gets created, it came back up over here. This level was created, it comes back down over here. Here, let me even extend this so you can see. Let me extend those levels. So you can see here where it's touching, it's going back up and mitigating those levels. It happens again and again and again and again all the time. Look, this level over here that got mitigated was revisited here, was revisited over here, and it was created over here on the 15th. The price came back to it. This level down here is a level I'm looking at on the NASDAQ, which is around 24,000. And I would not be surprised if the price came and fell down to that level. Like, I wouldn't be surprised if it happened. And if it did, and I was holding a short, I would cover at that level, because chances are we're going to bounce. Could we fall right through to the next one? Yeah, maybe, but we bounce at these levels very often. And this is just the weekly that I'm showing you right now using levels. If I zoom in a little bit more, let's zoom in to last week, let's say. I could turn on levels, in addition to the weekly time frame, let me turn on the daily time frame. I'm going to extend it so that whenever one of these levels gets mitigated, the bar will extend. Here we go. And so we're seeing here the blue lines are the levels for the day, and the red ones for the week. So over here, this is a weekly level that the price oscillated around. But you see how the day is created over here. It got created right at this bar. These vertical bars that you're seeing here, these blue vertical bars and the red vertical bars, are when that time period starts. So here the red starts on for the weekly. So that means over here, the weekly level is this weekly bar was on Sunday at 6 p.m. Sunday, 6 p.m., the futures open. That's when this bar is created. But then we have a blue one that shows up every day because that's when the futures are open every night at 6 p.m. So over here, you're seeing how the price, this level was created, and then the price came down to that level and responded to that level all day long, right? It, someone else who's just looking at the oscillations around VWAP, they're just seeing this line over here, right? Let me just hide this for a second. They're just seeing this blue line and they're going, oh, the price is oscillating around this blue line, right? But we know that's not all that's happening. We know that what's also happening is that the price is coming down specifically to that level. It's coming specifically to that level. So you know, hey, that's where I want to set either my entries to go long or where I want to take profits when I'm short. All right. And it happens again and again and again and again. Over here, in addition to so here the price fell down and it came back up to where? To a mitigated level from the previous day. Over here on Friday, the price moved up from the opening of the daily. It moved up to the unmitigated level, cleared it, and then after it fell because it said, hey, I revisited it. I'm done. I don't need to clear it again. Let me go ahead and give up the ghost and fall down. And now look, we have futures open up right now and price is fallen even further. And we can see that for this week, we have two levels, this weekly level and this daily level that was created today on January 18th at 6 p.m. was created. And so I would not be surprised at some point for the price to come and revisit this level. It can happen today. It can happen in the future. All right. So these levels just are attractors for price. Now, there's a couple of things you want to keep in mind when you're dealing with levels. One, not all levels need to be mitigated. They don't have to be mitigated. They're just likely to be mitigated. The older the level, the less likely it will be mitigated, right? So as a level gets created, if a daily level is not mitigated that day or the next day, it becomes less and less likely that it will be mitigated first. Because as you can imagine, every day that goes on, new levels are being created for the day. So those become more, they will attract the price more readily than a larger one. So if we go back to our example over here, you'll notice that, again, we have the weekly and the dailies on the chart. So over here, the price is moving up. We have this unmitigated level over here. This is what we're going to pay attention to. This weekly unmitigated level and this daily unmitigated level, which are nearby to each other. And you notice that the price moved up. Why did it move up? Because it came to touch this unmitigated level. It came up over here. And there was still some momentum. Once it got created, there was a bunch of daily levels that were created that were supporting the price. The price was stair-stepping over it. But you'll notice that in this whole week, this week over here from December, the first week of December, it's moving up, but it's losing steam. The price keeps coming back down to the levels, keeps coming back down to the VWAP, and eventually, where does it stop? Where does it peak out at? When that weekly level, when the weekly time frame changes. So we had an uptrend for this period, and right on this weekly time frame change, it stops. Yes, we revisit the top price 3 other times, this top price. But this is telling us that there's resistance up here, and then the price, after it cleared all the levels, it cleared literally every level, it cleared every daily level, every nearby weekly level, and only when that was done did it fall all the way down. And where did it fall to? The next nearest level. It didn't go up to this blue line. It could have, but it didn't go up to this blue line. Why? Because it's older than these guys. It's an older line from back over here. And so the most recent ones are the ones that attracted most. And when it came down here and cleared those levels, there was the next nearest weekly level was here. And so once it was done over here, it decided, okay, I'm going to move up over there. Where did it turn? Exactly on the daily change. It gave up the ghost. It said, okay, I sold off as much as I could that day. Time's over. Now time to go long, headed up towards this level. And I took this trade. I remember taking these trades that week where I just took longs all the way back up to that level. And once it got back over here, stop. Why? Because the next weekly level that it's going to go to is this one, which is exactly what it did.
This is
So we
crazy.
fell down over here, went up here for the daily, came down on the time frame change, moved up to the next level, then came down to the next level over here, went up to the next level over here. And it's like seeing, once you start seeing the price of a chart not on price movements, people are so used to seeing price-based and pattern-based setups. So they're like, hey, when this engulfing candle happens, then this is what should happen. And when this bear pennant happens, and this is what happens afterwards. And I get it. I get all that. All that stuff is very, very useful. But there's also time-based trading. So when you get to the river and you're fishing, yeah, the technique that you have for fishing matters, but also what time you get to the river.
Right.
And for some reason, I have rarely, and I say rarely because maybe I heard it at one point, but I can't find any example of people basing their whole trading based on the time of it, right? Most you'll get is orb strategies, right? Open range breakouts. We're like, hey, between this time and this time of the beginning of a session, it sets up a high and low, and then I might break that afterwards. Okay, there's that, and there's also stuff like at the end of the day at 3 o'clock, there's could be covering at the end of the day for a position, and so people do that as well. Or there's a difference between the volume in an Asian session and inside of the New York session. That I'll get, but that's not the time I'm talking about. I'm talking about timing. Here we just took a look at the daily and weekly, but you can go ahead and have all kinds of other timings. You can go up. Let's do the 1 month and the 3 month. You can go up higher, and you'll see. Let's just go ahead and show the 3 month pattern. So you see, we're looking at the same MNQ, but now instead of daily and weekly, we're looking at the 3 month, right? The 3 month session. And would you know it, the price goes to the 3 month. It often goes to the 3 month session. It goes through to the 3 month session again and again and again. So there's tons of these levels that are happening, right? Sometimes I'll add the level indicator 2, 3, 4 times to the chart and have as many as I can on there in order to see what's going on. And if you had every time frame and everything on the chart, you would see the price is always responding to these levels constantly all over the place. And it's that dynamic that's giving you the price movement. It's why the price is oscillating in this way. Let me just do one last thing and show you here. If you head down to the 15-minute chart, let's head down to the 15-minute chart. It's one of my favorite levels to trade when I'm dealing with prompt firm accounts. Because when you're dealing with prompt firm accounts, you generally have to close out that position that day. You can't hold it long term. So who cares what you're not looking at it daily or weekly. You're generally looking at it on a 15-minute. But I'll actually do both. Let me grab this, copy you, and do both. So copy you, paste you in the chart, and we'll do. One of the reasons I'll do this as well is that you can only have 500 lines per indicator on your chart. And so the script can only show you so many levels. And so if you add the indicator to your chart for each time frame, then you get way more of these levels that appear on your chart. But this depends on your plan. And so I didn't know that everyone would be able to do that. And so I combine them together. But you can do them one by one.
When you say your plan, you mean your TradingView plan?
Exactly. Your TradingView plan, some people are limited to how many indicators they can have on the chart. And so it makes sense to have the levels indicator. They can have up to 4 different time frames. But generally speaking, I just copy the indicator to my chart and use it for 1 per time frame. All right. We're looking at the NASDAQ right now. Actually, let me just hide this other one. It'll be confusing. We're looking at the NASDAQ right now. This is the 15-minute chart. Sorry, 15-minute time frame. Let's go down to a 5-minute chart. This is what the chart I trade from, the 5-minute on NASDAQ. And now, Peter, as you're watching this, you probably are seeing the pattern. This is the same chart, the same asset. And now it's a different time frame, the 15-minute time frame. And where is the price responding to? The 15-minute VWAPs, the 15-minute levels, 15-minute levels, 15-minute levels.
It doesn't matter what time frame you're on, the levels indicator that you created adjusts itself for the time frame that you're on?
No, you get to choose your time frames that you want to pay attention to. So here I'm on the 15. Sorry, this is the 1 day. Let me change this. I did this totally wrong. 1 second. Switch this to the 15-minute. All right, let's say that again. All right, now I'm on the 1-minute chart. All right, I'm on the 1-minute chart. And I'm looking at the 15-minute VWAP levels. 15-minute, not daily, not weekly, not monthly, not quarterly. We're just looking at the 15-minute. And where are we seeing the price respond to? Level, level, levels, levels, levels. Again and again, it's hitting these levels. It's using the 15-minute in order to do the oscillations within the 15-minute. Now, I can't guarantee you saying, hey, when it bounces, it's always going to go up. And if it goes through, it's always going to go down. That's not what I'm saying. I'm saying that these levels become areas that you go, if I'm going to enter a trade, let me enter in what one of these levels are touched and I see a confirmation in the direction that I want. If I'm going to exit a trade, let me choose one of these levels to be the price at which I exit. That's what I use these levels for. Not as a guarantee that every time it hits, it's going to behave in this way. Just that the price is likely to be attracted to that level. Not just the horizontal ones, not just the horizontal ones, the vertical levels, the time at which you should get in, you should consider the trade. Look, not only did this price hit here at this level, it hit it at this time, right at the turn of the 15-minute candle. Right? This guy over here, when we actually peaked out, it peaked out when we started the new time for that candle. Again, it happens again and again. It happens so often. Not every time, but it happens often enough that if you develop a strategy around this, you'll be. I'm going to turn you into fishers of men, folks. I'm going to turn you into fishers of men. All right.
Have you? Go ahead.
One last feature for this. We won't go into this because it's just supposed to be an introductory video, but there's a weird thing that happens where the last 2 bars, well, not just 2 bars, on the 15-minute, the last 2 bars of a 50-minute candle and the first 2 bars of a 50-minute candle will often behave wildly different than the rest of that candle. That here, I'll give you an example, here the price falls, and in this zone, so you would say that this was a bearish candle. This is the beginning of the 50-minute candle. This is the end of the 50-minute candle. And you would say generally it was bearish. But you see here how it falls and hits there 3 candles before, and then it bounces up. There are a bunch of people here who think, oh my God, it's reversing. It's an engulfing candle. I got to go long. But because it happens within this dead man zone, this no man zone, not the dead man zone, this is no man zone, I don't take what happens in the last 2 candles of a 50-minute candle or the beginning 2 as gospel. They're trixies. And so there's a feature within the indicator where you can add these zones. If I activate the zones, I'm going to say 2 on the left side, 2 on the right side, and I only want to show 2 max. Let's just go to our last candle over here. Actually, let me do it this way so it'll be easier for you to see. It draws these zones here for me for when I'm manually trading to remind me, don't take a trade here. Because I had to put that in because I was constantly taking trades, getting distracted because I wasn't seeing that was there. And I would just rush into a trade. And then I look back on it and I go, it was the last two candles, those first 2 candles. So you can set these zones for all kinds of different things. If I head back up to the 1 hour and I switch this back to weekly, let's say, I could activate the zones and it'll give you fair warning. It's a little bit hard. I made it very subtle. I didn't want it to be too garish. Let me just increase the number of zones that appear. So here it's subtle, but you can see there's a little faintness that says, hey, these last 2 candles, be careful. So you see here, this whole candle was, this whole area is moving up. But right as it gets into that zone, as soon as it hits that zone, look, we have this hammer candle and it completely reverses to the other side. So if I was looking to take a short because we know that here is the weekly VWAP and here's going to be the unmitigated level. I already know it's going to be the unmitigated level. All day I know that's going to be an unmitigated level. I could set up a trade right over here in order to hold. As soon as I see a signal that says, hey, it's turning, I can get in early. I don't have to wait till over here or the first candle over here where I miss out on 30% of the move. Anyways, levels indicator, one of my favorite. I think it's fantastic.
Are you going to be creating strategies to take advantage of these understandings?
Yes. So I've been working on a strategy. It's called CAST, and it's made specifically for the levels indicator. Let me go ahead and show you that right now. So I'm going to add CAST here, and yes, you can get this from the Sacred Profit library. Go to scripts and CAST. It's just been recently added. These scripts are constantly in flux, guys. We're constantly making them, constantly upgrading them because I'm using these indicators. And so, because whenever I see a shortcoming, I go in and then add a feature. If I go, hey, if I could do this, my life would be a little bit better. I go in and add that feature. These are living, breathing scripts, folks. So don't be surprised if you're like, hey, there's a new update, and I gotta re-add the script to my chart. All right. So cast, what this does is that it actually sets up one particular time frame. So in the cast script, you're going to go down to the anchors time frame, and you're going to set whatever time frame you want to trade. Let's say here I want to trade the 15 minutes, so I'm going to go down to the 5 minute. Oh, by the way, the levels indicator is smart enough to know, hey, if I'm on a time frame where you're not going to be able to see the levels, right? If I'm trying to see a 50-minute levels, but I'm or 50-minute anchor, and I'm on the 1 hour, don't show it. So that's what happens here. If you're on the 1 hour, you're not going to see the levels. If I go down to where I need to see it, it'll show up. Let me say I go to the 1 minute. All right. So what Cast does? There's so many features, and this guy, it's ever evolving. I'm going to do a whole webinar series exactly about how to use this because there's so many features inside of it. So you're not going to get it all here right now, but go ahead and play with it. Let us know inside the Telegram group if you have any questions. I'm happy to jump on Zooms, happy to jump on meetings in order to walk people through, and we're going to be setting up sessions in order to learn it. But what
Just
it
before
does
you dive
is
into it, if you could just concisely, succinctly explain what is cast.
Cast is a strategy builder built on top of levels. It uses the levels thinking in order to generate time-based trades in an automated way. So other people, you'll be using levels manually, and you'll just be combining it with other indicators that you use or your own trading style. But you might see a pattern that's like, hey, I see this pattern show up constantly. Let me see if I can use the strategy builder cast in order to automate it. And I created these tools because I want people to automate it and figure out their own settings that work for them. I have ones that work for me, but I add features to these things. I'm not guaranteeing you that these strategies are amazing, but you can make amazing strategies from the script. So we're here in cast, and we have we'll go over some of the general settings. So you have to choose your default unit, how you want to go ahead and calculate the distances for things on your chart. And you have these options. You can calculate through dollar amount. That's literally the dollar amount on the price scale on the right. P&L. So oftentimes when I'm trading, I'm not trying to trade based on price. I'm going to go, if I hit my stop loss, I want to know that all I lose is $500. If I hit my take profit, I want to know that what I gain is $3,000 based on whatever quantity I have within my property settings, right? I want to know that, so that if I only have one contract that I'm trading and I'm trying to risk $500, I know I'm going to have a lot more room. And if I bump that up to 10 contracts, I know I'm going to have a lot less room, but my risk will just be that, my P&L. You can also choose by percent. So percentage moves on the chart, number of ticks, number of points, and ATR. You have a section here for leverage. It's off by default, but you can set up leverage. This is very useful if you are trading crypto futures. Not useful really for anything else, but if you're trading crypto futures, you can then put in your leverage amount. You could even put in your maintenance margin in order to cover what the fees are. And that way, it'll automatically adjust the position sizes on all the different levels in your strategy according to the leverage that you're trading for. Entry. So for the entry conditions, I forget how many options are here. So you can decide to go long or short. All right, you can set to long or short, and you got to market orders and limit orders. And what the script is doing for the entries, it's saying, hey, What time do you want me to enter the trade? Remember, this is time-based trading on levels, not what price action and what are the entry conditions based on candlestick patterns or anything like that, and moving averages and momentums and RSI. No. This is what time do you want to enter this trade? So, in order to choose that time, you this all oh my god, I just love the script so much. All right, so at the bottom of the script under sessions, let me just
You're
give you
calling
an
it a
example.
script, but it's a strategy.
Yeah, but strategies, indicators.
Yeah, I know, but
These are all
strategy is better for the internet.
Well, I'm saying script because that's what it is inside of our backend. But yeah,
And I'm saying strategy because people search for strategies.
Fair enough. Although technically it's a utility, not a strategy, but let's not split hairs. So I might say that I want to trade the open for the NASDAQ. That at 9:30, I want to take a trade at 9:30. So I'm gonna go ahead and activate the session. I want this to happen from Monday to Friday. And at 9:30, I want to go ahead and take a trade. And I want that trade to happen. So I'm going to say it's going to happen there. 1 second. Let's just take off we're going to leave the default stop loss and take profits for right now. So over here, you're seeing 1 second. I have to switch this time frame to daily because I want it to happen only every day. Switch you to daily. And I'm going to wait for a session start. 1 second. Okay. So you're seeing here, I set up my session, which is to say I only want trades to happen around this time between 9:30 and 4. And I'm telling the script, I'm using the wait for session script because because it's saying, hey, at the first available bar, the first available trading bar, enter a trade. Okay? Enter a trade. So that's what it's happening here. It's entering a trade at the first available bar right at 9:30. And every day if I go and take a look, I'm going to see another trade at 9:30, another trade at 9:30, and so on. Okay? Great. And you'll notice that some of them are longs and some of them are shorts. How is it deciding? Well, what it's doing, it's saying, hey, where is the level for that time frame versus where the price is? That's what it's trying to decide. So here it's saying that if since I'm going both ways, it is looking for that price. So here, because the price is above the level, it's looking for a long. And I believe over here, because it's below, let's just head over to, I'm in replay mode. Let's get out of here. And here, because I am below the level, it's looking for a short. All right. Now you're seeing here that it's using default take profits and stop losses. 1 second. So what I'm going to do is I'm going to change the settings. And I'm going to say, I only want to risk, it's using the default P&L. So in the stop loss, I'm going to say that I only wanted to risk, let's call it $500. It's using the global setting, but I can switch that to individual settings if I want to. So over here, because I have one contract enabled, let me just close this. Actually, let me do it a different way. 1 second. Here, I'm just activating this close so that my trade closes at the end of every trading day, because since I'm dealing with prop firms, I can't hold the position overnight. So here it's closing the trade at session end. So over here it's starting, and you'll notice over here that, let me just put this bar here. Because I said $500, it is, let me just activate the labels for this. Oh, I have too many labels on the chart. Okay, 1 second here. So over here, I have my long position. And if I calculate from my entry, which is right over here, to the exit stop loss, you'll notice that the number of points that are there is 250 points, right? 250 points on NASDAQ, because every point is $2. You can see that here for security info. Every point is $2 of value. $250 is $500 worth of risk for every one contract. All right. So it automatically plots that based on that price. If I were to change the number of contracts, let's say it changes to 2, this will lower by half, because now those 2 contracts, if I lose $500, it'll be over here. All right. Fun. And if I didn't want to go with dollar amount, and I wanted to go, let's say, based on let's go based on ATR, I can switch that stop loss to ATR and say, hey, I want 3 ATR. I want to give my order room to move, and here it is setting the stop loss at 1 ATR based on the ATR that's here. And if I wanted to switch that ATR, I can adjust that ATR settings up here. These are the global ATR settings that are used for the rest of the script. All right. So now the trade is happening at 9:30. And I can say, hey, I only want to take that trade if I think there's enough room for me to make money. So I'm going to wait a minimum take profit. Oh, sorry. Let me do this in a different way. I'm setting the take profit level to being, it can either be the most recent level. So it could be the most recent level that's unmitigated. So the most recent unmitigated level for the daily time frame is, let's see if we can find it. All right, I didn't realize we had cleared so much. So here we have this guy. This is the most recent unmitigated level. Let's just see here. Let me just confirm that. I'm going to switch here the take profit to just that. So let me remove the fixed take profit and let the take profit be the recent level. Give me a second to see it replot. Stop loss, go back to global, this is 500. Forgive me 1 second here. I'm expecting to see a green bar. Why am I not? All right, 1 second, folks. Let me just see this here.
While you're looking that up, yeah, go ahead.
Yeah, go ahead.
All right. While he's looking that up, I want to remind everyone that you can go ahead to sacredprofit.com to get access to these indicators. There's more than levels. There's levels, waves. There's a whole bunch of indicators in sacredprofit.com. There's a bunch of series, and more are being added as we go, or improved as we go. Strategies are coming in there. You have 2 choices in order to get these indicators. You can either become an affiliate, and you can put money in your crypto account and trade crypto, and it's an active account, and you can get access to the indicators and strategies for free. Or you can sign up for the $500 a year plan, which is a steal because that price is not going to stay that way for very long. This is an introductory price. So go over to sacredprofit.com. And once you do that, you can also join the Telegram group. Now, you can join the Telegram group and gain access to Tom's calls, Sacred Profit's calls, as a lurker. Or if you are a paid subscriber or an affiliate, then you can actually interact with Sacred Profit. So if you have questions about what's going on, if you want to know a deeper dive into what he's thinking about the markets, highly recommend you join the Telegram group. That is available for you right now. Go ahead and do that.
All right, a little bit of a bug there. I'll fix that, no problem. But this gives you an idea. So over here, I have the short that's happening, and it's using the level that was created in the session that I'm in as my take profit location. But I can also use for take profit, I can set a specific take profit. If I want it to be, I want to take profit of, of $1,000, I can do $1,000, or a certain percentage, I could do that. The reason I would want to do take profit level is that, remember, we're expecting the price to move towards the nearby level. That's the whole point of levels, that these levels act as anchors, as magnets for the price. So over here, it sets up a short for the beginning of the day, and it gets down to over here. Now you'll notice that these, when it comes to the VWAP levels, they don't care about prop firms, right? If someone is getting into a trade for $50 billion, it might take them 3 weeks to get into that trade. But we are forced to exit our trades before the session is over. So over here, the price falls and I'm in profit, but I didn't get all the way over there. I didn't get to where I wanted to be. Now, here's not such a big deal because once this trade closed, it did close in profit. But let's say I wanted to, let's find a different example over here. Let's say for this one, for this long. No, let's find a different one. Let's do. All right, give me a second here. I want to find a good example.
I see your question
yourself,
there.
Peter?
I see that question in the chat there, Alfredo. I'll ask him once he's finished explaining the cash strategy. The question is, what's going on with Night? That's a good question. I want to know that too. So we'll get to that. Thank you for asking that in the chat. Got some interesting stuff coming for Sacred Profit. I've been working on some projects here for you. Kind of a social experiment game that's coming around, which will allow you to actually win some money by being a part of this show. If you're tantalized by that idea, stick around. Watch this space, watch us on social media because I will be here showing you that very shortly. And I will actually be streaming with Sacred Profit, well, streaming on Sacred Profit pretty much daily going forward. So we're always going to have activity on Sacred Profit. I'll give you insights from Tom. Excuse me, insights from Tom. He'll call in, but we want to create this as an active space for traders and for you to ask your questions, for you to be exposed to things, and for you to have a lot of fun. We want this to be an entertaining place to learn about the markets, crypto trading, and all things like that. So more to come. You're all set, Tom?
Yep, absolutely. All right, so we have this long position here. And you'll notice, and this happens a lot when you're intraday trading with the levels indicator. Here, the script says, hey, the bias is towards the upside, that this is the level that we are likely to get to. And we do get to that level, but it happens the next day. So what do? How do you set up a strategy that might take advantage of the direction, but maybe might not take that full profit? But how do you, the whole goal is here is how to get as much profit as possible while leaving the possibility that I might actually get there that day. Well, you have other take profit settings. So over here under the take profit settings, or rather the profit settings, you can decide, we have our take profit here set at the level, but I could set a trailing trigger. And I could say that, hey, this take profit, once I am, let's call it $250 in profit. Once the price has moved $250 in my favor, I want to go ahead and set a trailing profit. So here I set to $250. You'll notice that there's going to be a, let's do an offset of 100. You're going to notice this green line show up. Let me do it. Let's do it even more. All right. Well, the trade ends too early. Let's, but I'll show. Give me 1 second here. Here, let's do this one. This short. So the short is happening here, and let me set, because it's such a big move. Let's give you an example here. Let's set this to a trigger of $1,000. So when the position is $1,000 in profit, I want to have a trailing profit. So you're seeing that over here. This line over here, this green line is showing, this dotted line is showing that once the price gets down to that level, it'll activate a trailing profit. And the trailing profit says that if the price moves down by this offset amount, so if it drops by $250, it'll take the profit, which is what happens over here. You're seeing that the profit line jumps up, and because we're already in there, the price moves so dramatically, it already took the profit already. I could give it more runway, and I could say if the price moves back by 500, let's say. So you see here, the take profit now moved a little bit lower down because it said, hey, I'm trailing my profit line over here. And this wick came up and hit that level. And so it closed the position. Let's do it even more to give ourselves even more room. Let's do 700. Let's do 8. All right, let's give ourselves more room. Because I left the take profit current level on, it's actually closing the position here anyway. So let's disable that and give ourselves a larger take profit. So we'll give our take profit here at $2,000, let's say. $5,000. And we'll adjust the trailing trigger. So this trigger here, if we move it down to, let's say, 3,000. And it got the session end. All right, what's happening here is that I'm giving it enough room to end here. A great example. Here I'm saying here, I want my take profit to be at 5,000, let's say. And I want my trailing to be 3,000. So once it gets to $3,000 down, it activates this trailing profit line, which means that when the price comes back up to that level, it'll close the position. Right? What's great about this is that if this were to flash down, wick down, or anything like that to that level, without doing this pullback, I would get that full 5,000. But I don't have to ride this guy back up and just give back all that profit if it does happen. I could lock in some profit when I get to a certain specific amount. This can be it's very useful. I've rarely seen a strategy that does not improve in profitability by having a trailing profit. Rare have I seen that. It's only when you have really tiny moves, when you're dealing with mean reversions, where you don't expect to get that. All right, so that's trailing over there for the trailing profit. But you can do the same sort of thing for the other side. I can set a stop loss and say, hey, I want that stop loss to trail. That when I go $500 in profit, let me go ahead and trail that stop loss. Let me give it a little bit more room. $500 in profit. Let me give it a $500 buffer. Give it even more. You're seeing here that as I'm adjusting that, my trailing stop is coming down here and it's following the price. Let's remove the trailing trigger so you can actually see it properly. So over here, my stop loss is following. It's following the price. And once it crosses a certain level, it activates. And now, if the price pulls back, it hits that trailing stop. So sometimes I want to use a trailing stop. Sometimes I want to use a trailing profit. If the timing that I'm trying to catch is these big explosive moves, then I probably want a trailing profit because I'm expecting to get to a certain level, and then as soon as it pulls back a little bit, exit. But if I'm doing a trailing stop, I might be like, hey, I want to give this thing some room to run. I just want to let it run, and only when it pulls back, I know I'm going to give back a bunch of gain at the end, but let me just go ahead and do that, and you can give it more room to run that way. There's different ways you might go about it. You might do both. You might even set here that instead of doing that trailing profit, I'm going to undo that trailing profit. I'm going to put back my trailing. I'm going to undo the trailing stop. I'm going to put back on the trailing profit, and instead of using that sort of trailing stop, I want to use a break even. Because you might be dealing with a situation where you're in your profit account and you only have a certain amount of drawdown left. You can't afford a big drawdown. You want to make sure that if it gets into profit at all, that if the price ever pulls back, that I have a guaranteed out. Right? You're not trying to catch the whole trend. You're like, I just don't want to lose any money if it ever gets into profit. Well, I can set up a break even right now. And I can set up this break even now at $1,000, which you're seeing here, this $1,000 move. And if once it crosses that level, now the system will guarantee me $500 of lock-in profit. So let's say here we didn't need to pull back, but let's do the pullback over here. Let's go down to 2000.
I want to make sure we get to that, guys. To Alfred's question, Alfredo.
Yeah, I'll do that in a second. So 3000, and I want to lock in 2500. Let's say. Okay, here it's happening. So here the price fell down past the break. Oh, let me just change that so you can see it. The price fell down, hit the break even, fell down, hit the break even. So now when the price pulled back by that, let's lock it in a guarantee of $2,500 because that's what I have set up over here. There's all kinds of other options inside of this thing. We're going to be doing a whole deep dive into cast, and it's just growing. You can do stuff like change the level that you're using to decide if it's long or short. You might decide, hey, I always want to go long. I never want to go short. I'm going to force that to happen at every day. I want to try to go long. You can decide to have multiple different sessions open so that you can have a trade that happens at 9:30. You can have a trade that happens at 12 o'clock. You have a trade that happens at 4 a.m. 6 p.m. You can have all kinds of different sessions active. You can decide to reverse your trade, right? When the trade exits at a stop loss, you might decide, hey, I want to go in automatically with a trade in the other direction in order to try to catch some of that. My signal was wrong, so let me just go the other direction and see if that actually captures some profit. There's all kinds of things you can do here, but as you can imagine, this is all time-based trading. It has nothing to do with price action. It has to, or it's not primarily about price action. It's about timing. And I just love it. It's been great. The last thing I want to mention here is that you will notice some presets within the script. So because we'll be migrating some of our strategies to this type of system when they're based on levels. So Rocket Sunday, the strategy that takes a trade every Saturday at night. If I switch this to Rocket Sunday, and I switch to BTC USDT for BitGet for the 1 hour time frame. If I set that preset up, it's letting me first know. You can see what the settings are. That it's ignoring the settings for the script and it's using pre-made settings. And you'll be able to get the same sort of strategy, the same sort of profits that we're getting. Let me just switch this to $1,000, 10% of equity. This you're gonna have to set manually, and then you'll get the sort of trades that I have set up. So Rocket Sunday is a trade that happens every every Saturday at 6 p.m. and it uses Cast in order to do it. All right. That's
Question,
it, folks.
No, not that's it. We got
No, that's it for Cast, but let's go ahead and get the question.
All right, Alfredo, thank you for your patience. What's going on with Night? What's going on with Night?
All right. So remember, folks, we are in a bear market. Night is one of those tokens that I love tokens that launch inside of a bear market. It's fantastic. It's the sort of thing that I expect to rise later on. All right, so let's put on our template here. Oh, let's remove all those. Let's do this one. So Night is selling off. It's now reached to unmitigated daily level that was there before, and it's breaking through there. So obviously, what's happening right now is that the holders are selling off into this token. The initial holders and the people who got the tokens for free. There is a vesting period that is happening with this token because of the glacier drop. Just to remind everyone, Night is not released to everyone. Was not released to everyone at the same day. It's happening over a 90-day period. So as people are getting the Night token, they have an incentive to sell if they find that the price is falling. And since we're in a bear market, we're going to see a lot more of the selling. I'm actually happy to see this right now because I've been wanting to get Night token at the lower end. You want to divorce the price action for when you're dealing with an asset from the reason why you bought the asset. I did not advise you to I'd not recommend it to myself to buy Night because I think that right now it's going to shoot to the moon. The potential for the Night token to do that is outstanding, and the price, any of the price on the chart right now, is to me a fair price to buy it. Whether I buy it at 12 cents or whether I buy it at 1 penny, I'd be happy to get it at all, because I do believe that there's a high likelihood that this token, because of the technology that it provides to the crypto network, could get a lot higher in the next cycle. So I'm still very bullish on Night, and I'm going to be buying more, basically weekly until the next bull market. This is a time where you want to be buying these things when the things are falling, and when you're in the bear market, that's the time you want to be buying. It's so strange, Peter. If something is going up high in a bull market, people go, "Oh my god, this is a great buy. I'm going to buy it right now." But we all know that it's about buying low and selling high. We all know that. So if the asset that you want to buy is something you want, there's no price really that's too low to buy it at. There's definitely a price that's too high. So to me, this is exciting. If you're following what's going on with Night, there's all kinds of new things that are happening. Google is starting up. Looks like a validator for the Night token. It's been every 6 weeks or so. There's a new addition. There's a new feature being not feature for Night token, but a new partnership that's happening within the Night space. They're doing this right. They're doing this the way that I like, and so I'm thrilled. Anyways, I can go
Night
all
is
the time
not
about Night.
Night is not a meme coin. It's not like a Pepe coin, right? It is a utility. It's useful. It adds utility to the crypto space. And if you understand what's going on with crypto, you know that a token like Night is mandatory. It's not optional. At some point, there must be privacy on the network, because you can have, there are all kinds of institutions, businesses, healthcare that can't put their data on a transparent blockchain. They can't put it on something where everybody can see it. Not everybody wants people to know how much is in their wallet, how much they're holding, where that money is moving. So Midnight provides privacy, which is necessary.
Yeah, and take a look at the crypto market right now. If we take a look at the what's going on, we're getting sell-offs everywhere. Right now, we're
Wow.
getting a major sell-off. Bitcoin just fell. What is it? How long? How much did this fall just now? Anyways, we're getting sell-off in all assets. So we're getting this liquidation problem within the crypto space. When I call a bear market, it's not for nothing. Bear market prices go down. Okay, bear market prices go down, and that's what we're seeing here across the board. Wait till this starts happening inside of the S&P and Nasdaq. I believe that we've basically topped on S&P and on Nasdaq. There might be a little bit higher we can go to, but we're pretty much done. I think we're in a top-in pattern over the next couple of months. Come in February, March, I think we get massive drop, and I would not be surprised at all, to see 50% drop in the market this year. I would not be surprised. If we're taking a look at the levels, let's just switch here. It might make it a little bit easier. First, let me just remind you guys here of the 3-month cycle. Let me just show you this here. If you take a look, let's say we just take a look at Bitcoin. Let me hide this. You can use the trend indicator, again, available in the Sacred Prophet library under the anchors bundle trend. And if you set trend to 3 months, which is a good rule of thumb, folks, 3 months for a trend just to see what the overall trend is fantastic. Let's go to 3 months. You'll see here that Bitcoin entered bear market, started at the beginning of what was this? October? No, December. Beginning of January, it started the bear market. And whenever you see these bear markets, that's where you get the big drop in Bitcoin. If we go over to the S&P, we'll notice something similar. We're looking for a red area also to start around the bear market area, but because of how the options market, the derivative market moves of the S&P and the Nasdaq, what'll happen is that we'll get the drop before it switches, right? Let's switch this to 1 month to make it a little bit clearer. what we get is these weak areas of yellow then falling. We get yellow then falling. We get yellow then falling. And so we're headed into this thin area. I'm expecting by next month for it to be yellow, and then we fall lower. Um, and it's only when we'll be down in the dumps that this will then turn red, which is why I like using Bitcoin as my leading indicator for liquidity, because of how the options market can skew the trends for Nasdaq, Dow Jones, and S&P.
Did you want to talk about how you use the levels indicator to trade silver for $3,000 profit?
That was great. I just want to show this as a classic example here for silver. All right. Now, keep in mind, I've never traded silver before. All right. But I made these indicators in such a way that, hey, am I able to jump into any asset and give it a go? And so when I went into silver, I've been watching silver for the last couple of weeks. And let me just go ahead and put on our levels indicator. We'll put on the wave as well. Levels, let's switch this to, let's just leave it like that. All right. So this happened right over here. Let me show you just the daily. Actually, we don't even need to wait for this one. All right. So I'm looking at, whenever you're tossing levels on your chart, you're looking at these vertical bars. Okay. And you'll notice that there's a story that happens in that vertical bar. It's either going to be bullish, bearish, or neutral. If it's neutral, it'll chop. If it's bullish, price is going up, bearish, price is going down. But if it's going to change, it often changes, not usually, but often changes right around that time frame change. Time frame change, it falls. Time frame change, it falls. Time frame change, it rises. And so I like waiting. One of the techniques is to wait until this natural ebb and flow that I'm looking at coincides with the time frame change. Over here, it peaked at the time frame change, whereas over here, it peaked in the middle of the day. That's harder to time. All right. And so it did this thing in the day where it went up and went down, and it's harder to figure out what might happen. But when I see this sort of thing happen, and this is what happened right over here, I watched it. Here, the peak happened before the time frame change, and here I noticed that the peak happened right by the time frame change. Then I look, where is levels at? Where are my levels that I'm looking for, my daily levels? Actually, I think this one was weekly, if I'm not mistaken. Let me just double check. No. So when I'm taking a trade in my profit account, I'm trying to take profit at the earliest available level for what the move I'm trying to make. So over here, yes, there's a level down here, but the idea that silver could fall from over here all the way down to over there, that's harder. So I had my trailing stops set at these levels over here. This is a daily level that was created that day and another one from the day before. Okay? So what happens is that because I see that this happens at the end of the day, and it happens at the end of the day and it's coinciding with the time frame change, I decide, okay, the unmitigated level down here is going to call the price lower. So as soon as the futures open, I'm going to short. All right. So I open a short over here, and then the price falls. Now forgive me, I said that wrong. I wanted to short there, but I was out with my kids and I didn't get it at that time. And so what happened is that once the price was falling, I was proud for myself. I said, don't chase the price. What'll likely happen is that once it gets to the first level over here, it'll bounce up, and then I'll get in on the short. Here, let me see if I could show you what happened. Let me show you 15 minutes. No good. All right. All right. So I knew we were going to bounce. or I suspected we would bounce, and I said this is my kick, my second kick, Peter, for getting into the trade, inception style. And then I got in around over here, and I'm aiming down towards this level. But since we near missed over here, this is something that happens in levels often. If we near miss or basically clear this level, this to me is almost mitigated. Then it makes the next level down far more likely that we get to if we fall through. Not a guarantee, just far more likely. So over here, I get into a short and I hold the short all the way down to this level. I actually exited this level. Now, I could have made more money if I held it all the way to the end, but you're not going to get the end of a trade, folks. You're going to be in too early, out too late, not at all, or can't get out of the trade. You got to choose your pain. I'd rather give back some of the money at the end. And so I held the short to over here, cleared that profit, and then was able to make $3,000 on that trade in my prop firm account and qualify for my first payout. This to me was a textbook trade. I know I want to get into a short. When am I going to do it? I'm going to look for the time frame change. Why do I want to short? Because there's unmitigated levels below me. I have no unmitigated levels at the top. Where do I want to exit? At my level. That's what I did, and I walked away with my money. Great too, because we bounced and bounced and bounced and bounced and bounced and bounced, and there is where old Tom would have lost all the gains. But because I have levels, I don't have to worry about that. Anyways, this was a great silver trade, and there's going to be more to come. What's great about this sort of thing is that you don't really care then if you're in a bull market or in a bear market. You're just trading that day, and there's plenty of if you're choosing an asset that's plenty of volume like this one, you know there's going to be a bunch of these orders, these large orders that are going in that the VWAP is going to bounce from. Remember, we're dealing with forced buyers and forced sellers, institutional players, large players. And so you're not playing against other retail traders. You're playing against large players, and so you get to coast along what they're doing. So over here, just for the sake of conversation, we had the silver level here that showed an unmitigated level at 89.2 on silver. So I would not be surprised to have the price fall down over here. But would I do that trade now? No, because the time frame change happened, and there's no definitive move. The price was near that level, and we moved up. And so could it hit here today? Sure, but it's not my expectation. But if we were to rise into and curl and crest into this time frame change over here, then I would take the trade lower down, and that lower down level, this dashed line that we're seeing right now, would be the new level that's created if the market were to close now. And that's where I would look to take my profit. And if it bounced from over there and it slowed down, I would take the short again down to the next level in the same way that we just did. You want to use these levels as your support and resistance, yes, but also the direction in which to take your trade, because it's calling the price, which is something you don't normally hear. You don't hear people talk about support and resistance levels calling the price and when that should happen. You only get that with time-based trading, with cycle-based trading.
So these levels are like attractors, and it's important to know that. It's kind of like astronomers. They would look at space and you go, why is that body moving that way? It's because the gravitational forces are moving them or pulling them, and you can track trajectories and figure out the heavens if you can understand the power of attraction.
That's right. And that's how the U.S. government now can control the weather, because they learned that they could make Tesla coils. I don't know. I don't want to. We're already shadow banned on YouTube. We don't need to.
We almost made it through an episode without conspiracy theory. Almost. But
who do you think you're talking to? Okay, who do you think you're talking to? You're not getting anywhere. You're not going through any conversation. Our personal conversations you don't get through without conspiracy theories. If there's anything I like, it's collecting conspiracy theories. You know why I like them, Peter?
Why?
Because every single one of them is true.
Okay. Right. Facts. All right. Well, that's fun. Thank you, Tom.
That's it for me. It's what I've been working on. Guys, I do this for you because the more money you make, the more money I make. It's what I call capitalistic altruism.
pretty sure Sam
Subjective
Beckman-Fried,
objectivism.
SBF went to prison for something like that, I think. Well, maybe not exactly.
He went to prison because of magic box.
Effective altruism was didn't play a
Mine is
part.
a magic sphere.
But you're, I see.
So different. So different.
All right.
Been fun, folks. Thank you so much. We'll be back next Sunday, and keep an eye out for Peter. Peter's going to be expanding his Aaronness by doing very Aaron things, which is speaking on behalf of Moses. I'm Moses. He's Aaron. Look it up.
I thought we agreed on Khaleesi and Jon Snow.
Oh, yes. I'll be Khaleesi. You be Jon Snow.
Right.
And you're right. You know nothing, Jon Snow.
And you go crazy in the end.
It's fine. That was always going to happen.
That was also going to happen. That's destiny.
That's always going to happen.
That's destiny.
Yeah.
All right.
Thanks, man.